Welcome to Health Smarts. What we're going to talk about today is what do you do if you lose your job? If you work for a company that has 20 or more employees, then you have the option of COBRA. COBRA is simply the continuation of the current health plan. So obviously, if you have a group plan through your employer, you may be able to keep that coverage and move forward. You'll get a notice in about 14 days that says, hey, you're going to have this choice. Here's your cost. Here's how long you got to choose it. And it's basically 60 days. If you don't choose, then the COBRA doesn't happen. If, however, you wait 45 days and then have an event, you can choose it. You pay the premium, and then the coverage will continue. You will have to pay the premium from the day you lost coverage until the day you elect, and then continue paying it if you want to keep it. So that example I gave, 45 days, you'd actually end up paying 2 months premium. Now many times COBRA will be 2 to 3 times more than what you were paying because most employers pay a significant portion of the group health insurance. Your second choice is Obamacare, AKA the Affordable Care Act. If you're not earning a lot of income, many times this is a very affordable choice. Be aware that what happens, you go to the website and you put in your numbers. You say, this is how much income I'm going to earn this year. Not what you earned last year, what you think you're going to earn in the current year. And it's your gross income. It includes wages, it includes pension that you may get, it includes Social Security you may get, it includes all of your taxable income. So that's something to make sure you think about. If you're more than 4 times poverty, you will not get any help. And that's when we get pretty expensive. So when that happens, we have 2 more viable insurance choices. The first one is a short-term type policy. Short-term is just what it says. It was originally designed to be a filler between coverages. And it does not include coverage for anything pre-existing. There's very limited underwriting, but if you're being treated for something, it probably will not be covered for the first year. Now, you can get terms any place from a month up to 364 days. Then you have to renew it, and most plans then cover anything that occurred during the first year. Then you go another 364 days and you can renew it again. At that point, the current law says you cannot renew with that company, so you have to start a new short-term plan with new pre-existing. That is one of the shortcomings of short-term benefits. But they are many times a lot less expensive because they do not have to cover a lot of the things that regular Affordable Care Act or group covers for people. So your next choice is kind of an interesting one. It's one that I have for people, and basically I work as a recruiter for a company. They are looking for people to do research into how people live healthy. So they have quizzes that people take. They're very short, about 15 minutes. And they answer questions about how they live. That information is then de-identified and actually is being sold to places to help people figure out how people are living healthy. Interesting. Now, it's not a full-time job, but it is W-2. So that means you can go to work just a few hours a year, establish yourself as a W-2 employee, and take advantage of their group benefit plan. Right now they have around 40,000, 45,000 people in America that are taking advantage of that. So that is an interesting hybrid. The final way would be what's known as a cost share. That's where a bunch of people get together and actually share the cost of a medical plan, or a medical, not plan, medical expense. I will go through that particular plan in more detail in a separate video. Thanks. See you soon.